Hello, Theo traders. This is Gianni DePoce, and today is the 11th of June, 2024, and markets are waiting for a big day of data and headline moving items tomorrow. We have inflation data coming in and the FOMC rate decision, along with a Fed Chair Powell press conference. So no shortage of items that could send the markets moving in one direction or the other. But I want to look at some things underneath the surface of the market that I think are actually very encouraging. And even if we do see a sell-off tomorrow following all of those reports and headlines, I don't think it'll last long. I still think this is setting up to be a bullish summer, but things could change quickly once we get deeper into the summer. So here, let me explain. Start off by looking at the S&P 500. We continue to consolidate near the all-time highs. We are in the last days of the June contract in the S&P futures. We're about to roll over to September. But what I'm most uh, curious about right now and watching closely is the NASDAQ that continues to outperform. So keep closing at new highs. That's bullish price action. Even though the semiconductors have paused in their rally, to me, it still looks pretty good. NVIDIA did satisfy our upside price target before. It was at 1,200. We had that 10-for-1 stock split yesterday. We nailed down a 25% return in just around 2 weeks for swing traders. But it's not just NVIDIA in the chip space that is doing well. You have Micron Technology that hit a new high today. Advanced Micro Devices still struggling a little bit, but trying to complete a higher low. But, whether you look across the board, Broadcom looking pretty strong. I'm also watching Marvel Technologies here for what has been a laggard could turn into, a game of catch up. So I think that what's going on in the chip sector is very encouraging. But obviously the big news today is Apple breaking out to a new all-time high. This is textbook bullish price action. Even if NVIDIA embarks on a period of sideways price action or a consolidation, which I would argue would be very constructive and healthy with respect to that stock's trend, what we're seeing in Apple today opens the door for a new leader amongst the Magnificent Seven. So I know that Elon Musk is beefing a little bit with what Apple's doing with their AI programs. I don't care. People asking me, Gianni, why are you a bull on Apple? Because it keeps making higher highs and higher lows. And when I started getting bullish on Apple, here back at the beginning of April, it was based on the fact that, hey, this is a huge stock that can absorb large amounts of capital. And if we do see a rotation amongst the leadership in the equity space, Apple is a fantastic candidate to fill that void. And that's exactly what we're seeing. And my upside target on Apple is in the 250, 260 area. And after that, I don't really know. I don't really care. All I know is that the path of least resistance in Apple looks higher, especially if we're above 195, 200. Another notable mover in the tech space, and it's a stock that's on the books for us here at TheoTrade, is CrowdStrike. CrowdStrike was just added to the S&P 500, and this is a stock that we've probed in the long side a couple of times over the last several months. We started buying CrowdStrike originally back here in October of 2023. It's been making higher highs and higher lows, then spent the last, several months, really this entire year, consolidating into an ascending triangle price formation. These are continuation patterns, which means they tend to resolve in the direction of the underlying trend. And so we actually had a buy trigger on this stock in May. The stock came back down. Wasn't one of those breakouts that takes immediately. Sometimes you see a retest, and this is one of those stocks that did that. And believe it or not, it actually traded below the stop loss during the day, but I always use my stop losses for end of day closing prices. Didn't close below, so we stayed in the stock. And then it gapped up after earnings and then really began to accelerate after reports surfaced that they're adding it to the S&P 500. So I love this stock. It looks really good. I think it's going to hit 490. And, really the theme that we're seeing here is that so many tech stocks are looking strong. If you look at the 1 week leader in the S&P 500, it's the technology sector. In the top performing sectors at various intervals, depending how you slice it, are basically tech and communications. That's risk on. Yes, utilities had a nice run over the last few months, and that was a bit of a cautionary signal. But I think there's something else happening underneath the surface. I think rates could be poised to sell off, or I should say bond sell off, rates rise We'll see what Powell has in store tomorrow for the coming weeks and months. And really, all that's going to do is enable the Fed to ease, but not have to cut rates as much in order to re-steepen the yield curve. So right now, the markets are still pricing in the first rate cut to be in September. We'll see what happens after tomorrow's inflation data and Powell's presser. But I think that what we're seeing underneath the surface here is encouraging for higher stock prices in the near term. And really, no matter how I slice the bond market right now, it still kind of points to higher prices. If bonds bid, and let's say rates don't get cut on the short end, but you see rates fall on the long end of the curve, which I kind of have a tough time believing because the curve's been inverted for so long. But let's say that that happens. Okay, our job is to entertain various scenarios, not become married to a particular outcome. But whenever rates come down, tech seems to outperform. And so if tech's outperforming, the likelihood of stocks suffering a serious pullback are not that high. That's why I think rates are going to rise on the long end of the curve, and then they're going to drop on the short end of the curve. And the re-steepening of the yield curve is what will coincide with an economic slowdown. I'm looking for, a cyclical, healthy correction in stocks. Could be anywhere as high as a 25% pullback, but not anytime soon. I'm talking like months ahead from now. In the meantime, I think we're going to continue higher in stocks. But if rates do rise, okay, crude oil coming off an important low. Been looking at some names in this space. SM Energy and Liberty Energy are looking good, to name a few. Even what's happening in natural gas is looking pretty interesting. We did come away with a nice swing trade on UNG a couple of weeks ago. Did trim the exposure on that, but I still do have a position on CNX Resources here. Natural gas equity play hitting new multi-year highs, decade-plus highs is looking pretty strong from my vantage point, keeps making higher highs and higher lows. So that's a stock that we want to own. Now, I do want to take a look at what's going on in crypto. You're seeing a little bit of selling here in the near term, but I'm not going to fret about that too much because we're really just consolidating near the all-time highs, and that is bullish price action. If you look at names like MicroStrategy down a little bit today and Coinbase still consolidating near the highs, but the real strength in crypto-related stocks has been in Robinhood, kind of a nice hybrid between traditional finance and the crypto world. And this is coming off of a new multi-year high as well. I do have a target of 30 on this stock. I do also want to discuss what's happening in precious metals because I think a low of significance is very close, if not completed. And we still have positions in a lot of these precious metal names. They've been chopping around over the last couple of weeks, but I think a higher low of significance is imminent, and then we'll see a return to new highs. And I've talked about in past videos how the correlation between bonds and precious metals seems to have shifted, and now it looks like whenever bonds sell off, you're seeing precious metals bid, which is unusual. It was the other way around for many, many years, but I think it speaks to the probability and the fact that we are in a new macroeconomic environment and the game is changing. And really, it's just opportunity costs. If inflation is going to come back, because remember, the Fed, when they cut rates, if they cut rates later this year, they're going to be adding back to the money supply. So the question is, when are they going to join the other big central banks? Bank of Canada, ECB, and the Swiss National Bank are all easing. So again, the Fed's not going to cut rates unexpectedly tomorrow, I don't think, at least. I think right now the earliest we get it is September, then probably November if that doesn't happen. But I think we would just get one rate cut, and it may happen because the market's coming down from its highs. But guys, until tech stops its outperformance, I don't see that really happening. I do still like what's happening at Google. That's consolidating near the highs. Amazon has a nice long setup, and even Microsoft and Meta. These are all bullish charts. Meta closed that gap from before. So no matter how you slice it, the big companies still have strong charts. I'm seeing a lot of leadership in the technology space as well. And I continue to watch the biotech sector, not so much healthcare, but biotech. Biotech, I think, has the potential to give us a lot of winning positions. So I'm stocking a few trades in that space. If you want to learn more, join us in the TheoTrade chat. We give trade ideas in there all the time, and that pretty much takes care of everything that I wanted to review with you today. So I hope to see you in the chat room, and that's all for now. We'll see you next time.